What's going on, guys? How are you? How are you doing? My name is Shocks and this is Shocks Capital YouTube channel. If you're new to this channel, don't worry, you're in the right place. If you are not new, welcome back to the channel. So guys, we want to talk about top-down analysis and the reasons why you need top-down analysis. Just look at this picture that you're seeing in front of you right now. What can you deduce from this one? If you're not an experienced trader, you might be confused by what you are seeing here, by this area that you are seeing, this consolidating area on your chart. So what do? You're going to use what you call top-down analysis. You are going to integrate your strategy with the time frames. You are going to make the time frames work for you. So what are you doing? You are going to look from the highest time frame to the lowest time frame, which is going to be your entry time frame. So what you are going to do here is we're going to start from the 4 hour, we go to the H1 and we get our entries on the M15 time frame. So if that is something that interests you, go with me as I explain everything to do with that premises. So from this picture that you are seeing on the M15, I want to show you how it shows on the H4 so that you understand where we are going and where we are coming from. So this is one reason why you need top-down analysis. From what you are seeing here, the shaded area is the same area from the M15 area, and this is the H4 time frame. So from here you can clearly understand what price is trying to do from the H4 perspective. And the other reason is we want to reduce our risk. So I'm just telling you reasons why you need top-down analysis before we go right into everything to do with top-down analysis. So number 2, you need to reduce your risk. So what do I mean by that? If you identify an area or a demand area, a supply area on the high time frame, for example, if this is your supply area, right, and you are supposed to be taking your trade, as soon as price touches this supply area, your stop loss is going to be up here, which is not ideal for traders who are trading accounts that are less than 10,000, 20,000 US dollars. So this will eat your account up and it's not advisable. So that's what we want to do. We want to reduce the risk, we want to reduce the confusion, and number 3, what you also want to reduce is the time that you are going to take waiting for your trade to go into profit. So we want to reduce the drawdown time that you are going to be subjected to, because a lot of guys or a lot of traders are confused, and a lot of traders spend a lot of time in drawdown, and a lot of traders don't know how to do top-down analysis. So that's where I come in. So I'm going to explain to you using the volatility 50 index chart, and I'll go to the volatility 25 chart. And these indices are found on Deriv. If you don't have an account and if you don't know how to trade these things, this channel is littered with information on how to trade any of these commodities. And what you need to do right now is to go down in the description down below, get your trade account up and running and be trading with me. And you need to join our community on the Telegram chat, and you can get free signals from Shocks on a daily basis. So let's go right into it. So what are we doing here? What are we seeing? We analyze using market structure if you want to understand the direction of price. And remember, if you are looking at top-down analysis, you are looking at 3 things. And what are those? Number 1, you are looking at the bias using market structure. Number 2, you are looking at the swing points, that is the lows and the highs in the picture, right? Remember, the lows and the highs gives you a liquidity areas in the chart. So what are liquidity areas from the smart money concept point of view? The liquidity areas are the areas that work as magnet to price, where if you are seeing this picture, right, you can see that this is a high, and this is a low. So these areas work as magnets to price. They draw price to themselves and they repel price again. So it depends at what stage are you looking at these prices. So number 1, we have this high here where price has been drawn towards to that area and repelled again. So this is the simple premise of how to look at liquidity areas. from a smart money concept point of view. So that's clear. So what do we do next? We are looking at market structure and we want to identify the direction of our price. So if just by looking at this chart, you can clearly see that this is a very simple downtrend that is going up. So this is the downtrend, right? Number one. So if it's a downtrend, what are you going to do? You are going to mark up your swing points, your major swing points. So this is a high, right? So if you're looking at a downtrend, the most important ones are the lows. Why? Because as soon as price breaks the lows, you are going to be you're going to be looking at possibilities of you finding a trade from an order block or from a fair value gap, depending on what premium discount you are using in terms of the smart money concept premium discounts, which ranges from order blocks, fair value gaps, and things like that. And again, if you don't understand these terms, you can search through this channel. You will find what an order block is, what a fair value gap is, so that you can be better positioned to understand what we are looking at on this chart. So number one, price breaks. And before we get into this consolidation, which we're confusing a lot of you guys on the M15, this is the break on the H4. So when the H4 breaks, what are you doing? You are looking at the next best order block that you are seeing. And when this break happened, where is your order block? The order block is simple. This is the order block. What is the order block? The last green candle before a down move and the last red candle before an up move. So this is your order block in this area after break of this low, after this move, right? So what are you looking at? Number one, on the H4, you are going to identify your order block. Then you move to the H1, and you're going to see that order block that you get on the H4 is going to be further reduced to a simple order block that you are going to further refine on the M15, and you can get a better entry. So guys, this is your order block from the H4, and don't be confused. Let me just mark the order block that I'm referring to here so that you can see what we are doing. So this is the order block from the H4 that is marked, the second one down here. So let's just delete this one so that we don't confuse each other, because remember, we want to remove confusion, right? So this is your order block from the H4. On the H1, remember, you are going to further refine it so that you are not confused. Number one, you see there's a new low that was taken out here. So this order block now, you can refine it to to this top OB right here. So now you are not using the whole order block from the H4. You are now using the order block from the H1. So here, this is what you do on the H1. So what do you do on the M15? You might be asking yourself. So before we go there, let me just show you a simple thing here that you need to understand when you are looking at these things, right? So this is how price is moving on the H1, right? You understand that, guys? This is the H1, right? So if we want to further reduce this to the M15, I want you to see what is happening with price here. So these are moves that are going in the direction of your trend, right? So let's say this is an uptrend, right? Right. We have these little moves that are happening. These are called retracements, right? So on the M15, what you have to understand is when price is in the retracement phase on the H1, on the M15, you can clearly see that as a full-blown trend if you don't understand what you are doing. So what am I saying? Okay, let's look at this. So this is a move going up, right? This is a move going up on the M15. So what I'm going to draw in this picture is what you are going to see on the M15. So the M15 will look like this. You see what I'm doing? So the M15 will look like this. So this is how the M15 will look like. So that's what I'm saying. If you look at the M15 alone, without looking at the higher time frame, that is top-down analysis, right? Without doing top-down analysis, you will see the M15 as if it's the mother of the trend, as if the trend is full-blown, because on the M15 you see price doing like this and you tell yourself, nah, we are in the downtrend, and let's look for sell opportunities. And as soon as you enter a sell there, it retraces on you and goes the opposite direction, and that is because you are not paying attention to the H4. So what I want you to know is, after you after you identify your order block on the on the H1, you need to know or to be alert to this pattern that happens on the on the M15, where you are going to see price going in this direction like this. So what you need to understand now is you are going, let's take for example that you want to see price going up. You first see it going down like this. What you are waiting for is a break of of this high after retracing an order block. So let me just take that home and show you on the chart what I'm trying to explain to you here. You see, this is the H1 and this is your order block. What you want to see on the M15 is, remember, I'm saying this move on the M15 will look like what? Will look like this, right? So what do you want to see? As soon as price touches the order block at this particular point, you want to see price breaking a breaking a low and retesting an order block here, making an M formation so that you can enter. So the simple explanation is you want to see an M in the in the order block on the M15. So that's top down analysis, right? From the top time frames, which is the H4 and the H1, you are looking at areas that you can get involved. Then from the lower time frames, you are looking at the exact moment to get involved, or the exact moment to press your buy or sell button. So I want to show you this trend that we are looking at here on the on the M15. So let's just put our order block here and go to the M15 and see how best you could have taken advantage of this trade. Right, this is the M15. Remember what I was saying. On the H1, you see that this was this was a retracement, right? But on the M15, it looks like a full-blown uptrend if you are looking at it like this. So number one, we have removed the confusion, and now we want to be able to use this same time frame to get our trade. So what do? As soon as price is going up, right, you'll be marking out the lows to see what price breaks first, right? To marking out the lows. So these are your lows that you're seeing, and these are your swing points. Remember, you're looking at market structure and trying to get a trade using using market structure, or you want to get an entry, as we say it in the forex industry, right? So after this, what do you see? Price breaks this low, this particular low. So when price breaks a low, it leaves what we call a breaker block. Remember, we're looking at we're looking at price action and smart money concept. So this is a breaker. Price breaks and retests that breaker and you go. So remember, you're looking at the breaker and you're looking at the order block. Those are two areas that you can get involved if you are using your entries as a smart money concept. So this is a breaker, this is an order block. So when price breaks a breaker, you get involved at the breaker, but your stop loss has to involve both the breaker and the order block. So you put your stop loss above the above the structure here, which means your stop loss is here, your entry is here, and you are targeting the next low that is the beginning of the of that retracement that we are talking about. Remember, this was the retracement, so you are looking at price getting to this retracement and your take profit should be around this area, and this is what you are doing, and this is how you can use top-down analysis to your advantage. To just recap, guys, what we are doing here is we want to remove confusion, we want to reduce our risk, and we want to make sure that we don't spend a lot of time in drawdown. So what we are essentially doing on the H4, we are looking for what? We are looking for buyers. We are looking for the direction, for the overall trend of what price is doing. On the H1, we are looking for what? On the H1, we are looking for a safer way of reducing our risk, which means we are going to refine our order blocks and our breakers from the H4. If you get your points of interest from the H4, on the H1, you're trying to reduce those ones into small packages that you can get around, that you can use, right? On the M15, what are we doing? On the M15, we're going to be looking for entries, and we are going to be understanding this idea of seeing a retracement as a trend and then ignoring that and identifying our breaker and order block as price touches our order block from the H1 time frame. Remember, if you move from the H4, you know where the direction is going. You can't be confused, right? If you know the direction is up, you have to stick with that until you get into a trade. If price doesn't do what you would have projected for it to do, then it's okay. You look for another setup, you look for another trade. You are there, so you need to be patient, right? So guys, this is what I wanted to show you. And remember, if this is your first time hearing about Deriv, hearing about these indices, it's not too late. You can get your account in the description down below, and you can trade with me in the Telegram channel if you join now. And I'll see you in the next video. Hands to the head. Salute, shocks.